Okay, so I kind of goofed up on last night's webinar. Pearl and I had a whole system that we abandoned where basically it worked. It was supposed to work along the lines of I would do the presentation and she would handle chat, and then she would flag all the questions that came in that I needed to answer that she wasn't answering herself. So as it turns out, for some reason, I couldn't see those. I mean, I think I figured out why I couldn't see those questions. So I ignored by inadvertently, by accident, a whole bunch of questions that I'm going to now, after reviewing the chat roll, which was pretty lengthy. We had about 170 people on the webinar. I'm going to go through those right now to make sure that everyone gets their questions answered like I promised. Normally what we do when we're in different rooms, I'm down in my studio, basement, and Pearl was upstairs watching Jeopardy, so she didn't want to actually come down here and sit in the outer room here. But normally what we do is we create a Google Doc, she pastes all the questions there. I was like, don't worry about it, just handle chat or whatever. So I goofed up, she didn't, and here we go. So, welcome back. If you want your questions answered, here they are. Oh, also, one more thing. So I also, at the end of the live presentation, I offered, I think, 25 or 26 spots for people who are interested in our services to talk to me about their college plan. Those apparently got taken up before we finished the webinar. So I went ahead and opened up more slots. I'm not sure when you're going to be watching this, but I opened up another 10 or 12 spots for college strategy sessions. They're also going to be free. I'm extending the same offer. It's normally $499 free for you because you signed up for the webinar. So I'm going to have my assistant put a link to my calendar right here at the bottom of this page. I just have to make a note to remind myself to do that. Okay. So let me go through some of these questions. David, just received my daughter's freshman year spring semester bill. What can I do for her and also my grade 10 son? Well, the spring semester bill and the financial aid relating to that would have been governed by what you filed last year, assuming that you filed last year. So if you didn't file for the previous year, I would go ahead and get that in. For your grade 10 son, this is the time to start planning. I would definitely see whatever you can do to reduce to improve your eligibility for aid. You might be able to move money around. You should go on net price calculators that I said this in the webinar that each college posts, so you can get a feel for what your out-of-pocket costs might be. That's the type of thing. And again, I don't know if you booked, because I haven't checked everyone, but if you booked a conference, a college strategy session conference call with me, we can certainly talk about that too. Because the earlier you start, the better. All right, Gina gave some great advice to David, I presume. Apply for outside scholarships in your community. Your daughter's high school should have a list, and check the websites of other schools around you. Yeah, that's one of my favorite sneaky tactics. However, if you are receiving need-based aid, those outside scholarships might actually reduce your eligibility for need-based aid. So that's my only comment I wanted to add there. But I appreciate that. It was nice to have Gina answer that. All right, Maura, who's a current client. Are 529 plans considered in the child's name? If so, what are our options? They are considered to be parent assets on the FAFSA. That's in the law and the regulations. However, for the CSS profile, I have a sneaking suspicion, which I can't prove. I readily admit that the 529 is still considered a child asset, which is worse. So the things to think about, and I think we worked through this before, you have to look at what the tax consequences are for selling a 529 early versus what the potential financial aid benefit is. And if we haven't talked about that already, then we should talk about it. But it doesn't always work out for people to do that, so chances are the advice might be to do nothing for that. But you never know. Good question. A lot of people should have that question. All right, SV. Will the custodial Roth retirement account impact college need-based aid, assuming student will not tap into it for funding college? It should not, because all retirement accounts are exempt. So there should be no adverse consequences for having that. Jeff Goodman, do I need to disclose stock that is deferred and not vested yet? That's kind of an esoteric question. My move is I would not disclose that, because you can't use it. It shouldn't be counted against you as a resource to pay for college. I don't know specifically the rule is on that. I don't think you have to disclose unvested stock. It's only assets that you can readily liquidate. So that would be my short answer. I would probably defer to Pearl on that one, but I think you're safe not disclosing that. Kim, if a 529 is in child's name, is it too late to change? No, it just may not be worth it when you look at the tax consequences, but it's never too late. Michelle, where should you put funds so it's not included? So I think this was earlier in the presentation because I went over that. There's 4 exemptions that I covered in pretty extensive detail on the presentation. What about, Michelle, what about unified gift to minors accounts? Those are child assets, and those penalize you far more severely than parent assets. So those are potentially funds that you want to look at moving. Tim, home equity goes against you. For approximately 400 colleges, yes. For the vast majority of the 4,000 colleges out there, no. Depends on what colleges you're applying to. Michelle, tax-deferred annuities. I think the question is, are they penalized? Are you penalized for having a tax-deferred annuity? That sounds like a retirement annuity. Again, I'm not a financial advisor, so I'm a little out of my wheelhouse here, but I believe that that's a retirement annuity, which is otherwise known as a qualified annuity, and that is exempt. Incidentally, I don't know if you can hear this. If you hear sounds of snoring, that's just one of my attendees from last night's webinar that's my dog Arnold, who thought it'd be a good idea to come down here into the basement and park himself right under my desk here. So it's distracting me, but it's pretty cute. All right, next question. Pat, do I need to disclose on the CSS Profile or FAFSA my small, less than 5% interest in a partnership where the interest cannot be sold? I think technically you might have to, but I think that's one of these no harm, no foul things that they would not penalize you for if you did not disclose it, unless there's some kind of flow through on your tax return. So if you get a K-1 or there's some sort of line item, an income flowing through on one of the schedules, then I would disclose it and explain that it doesn't have any value because you can't sell it. So you might have to do that on appeal. Roland, I think you emailed me separately, so you might have asked me this similar question. Is there any benefit to paying off your mortgage or the equity you have in your home weighted the same as cash? Well, it depends on the colleges. So if you're applying to colleges that penalize you for home equity, it's probably not a benefit to pay off your mortgage. And some colleges don't penalize you on all of your equity. They may cap the equity at a multiple of your income, like 125% of your income. So the answer depends on the colleges that you're applying to. Okay, SV again. Still funny to say that. Thank you very much. How much does it hurt students to have earned income? Is there a dollar threshold that does not? So the answer is any income earned will be penalized at 50% of that amount. So, which is kind of crappy because I worked all my way through college. I probably would have sat out because you get penalized at 50% of whatever you earn. Then if you put the money in a savings account, you're penalized at 20 or 25% of that amount. So when you add it up, you're really only retaining like 15%. It's a disincentive not to work, which is really effed up if you ask me. Pardon my Francais. F is for Francais. It's really Francais up. So there's no dollar threshold either. Lolly. Oh, hey, Lolly. I think we talked in the past. Do you give the exact amount in your bank accounts or round out? Actually, how do they even know if you're being honest? That's a great question. It's better to give a specific amount because then it looks like you're being more accurate. That's my philosophy. But I don't think the financial aid forms allow you to put dollars and cents cents in. They may round up for you. How do they know you're being honest? It's really basically honor system, but anything you put down on the forms is subject to being verified. So be prepared to verify anything that you disclose, or don't disclose, I should say. Natalie, this was definitely the line of the evening. The CSS profile is, and this is in all caps, a financial colonoscopy without sedation. That is graphic and hilarious. I think I said something like it's like a root canal without Novocaine. I like this one more. So thank you for your service. Thank you for your contribution. Are you penalized for not owning a home? For not owning a home? No, you're not penalized for not owning a home in the financial aid formulas. If anything, it's helpful or neutral. Okay, SV, again. I won't make the same joke. Civ, yeah, I will. It's a free workshop. It's a free presentation. It's a free, non-refundable presentation. How does holding a job impact student FAFSA in terms of their earned income? Okay, so I mentioned that before. 50% of the earnings penalize you. So if a kid makes 10 grand, they receive 5,000 less in financial aid the following year, or maybe 2 years later, depending on the year. Okay, when Tao. Neither parent has income from work or employment. We live on savings and IRA distribution. Are those counted in the same way as salary? IRA distributions are counted as income, I think, pretty much the same way. Savings distributions are not, because they're not taxable. Assuming your IRA distributions are taxable, then that's my answer. Okay, Ed Duvey, or Aduvi. FAFSA asks to enter 401k info based on the W-2. Right. It asks you to enter your 401k or any retirement contributions. So that gets added back to your income. So I mentioned this last night. If you make $150,000 but you contribute $20,000 to your 401k, your income for your tax returns is $130,000, but your income for financial aid purposes is $150,000. It gets added back. But once the money is in the 401k account as an asset, that's exempt. Barbara, for the value of your home, can you not use Zillow but instead take your purchase price and multiply it by the rate on the government website about home values? Yeah, some financial aid offices will actually use Zillow, but Zillow's not, it's not universally dispositive. It doesn't mean it's a good value. So I would use the lowest value that you can possibly defend. Now, government website might mean, I'm not sure exactly what the question was, but a government website might mean the assessed value, and that's too low. That's a value that the regulations tell you specifically not to use, so you can't use that. Kathy, is it better to refinance your mortgage in order to save for retirement, or wait till college and then refi? That seems to me like more of a college, not a college planning, but a financial planning questions. So I can answer from a college financial aid perspective, which might indicate that you should refinance it, pull cash out, and put it into an exempt asset, maybe an insurance product or something. But it could be potentially problematic, so I'm not recommending that. I'm just saying that a handful of my clients have done that over the years, and it helps to refinance before or during college and not wait. But for retirement and all that, if you're freeing up cash flow in order to save for retirement, and you're comfortable with all the other aspects of this potential transaction, then that seems like it could work out. But I'm definitely out of my league on that one. Okay, next, Sherry. Since you mentioned it, I looked up financial aid deadlines for one of the colleges my son is applying to. It says the deadline to accept federal direct loans for the fall semester is December 1, blah, 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 blah. Okay, so that's not the deadline to file. You need to look up your priority financial aid deadlines. That's different than the deadlines to get loans. It's very confusing. You are by far not the only one to have this type of confusion. So you need to look up the whatever the college is, Google. Maybe I'll do a separate video on this at some point. But you want to Google, Syracuse University priority financial aid deadline, and that is when you need to file the FAFSA and the CSS Profile in order to be considered for all kinds of money, not just loans. But if you miss that prior deadline, or you're not going to qualify for need-based aid or whatever, the deadlines for filing for the federal loans happen to be way later, and those I think are June of the next year, almost the summer after you enroll in college. Those are really late, but that's not the good stuff. The free money priority financial aid deadlines are much earlier. Barbara, what is the secret you wrote about 529s? Are they good or bad? Well, what I mentioned before is it really depends. So if you have a high income and you're not going to qualify for need-based aid, I think the 529 could be great. If you are going to qualify for need-based aid because your income puts you in the right box. The 529 is not so good because it counts against you. So I have mixed feelings. I have ambivalence about the 529. Billy, best advice I've learned from Andy. Oh, cool. Number 1, plan ahead. 2, legally shelter everything. 3, read the FAFSA directions, such as self-employed income. You rock, Andy. And I'm not affiliated with them. Big fan. All right. Cool. Love to hear that. Thank you very much. It's nice to get positive feedback. Meg, if you own your own business, is there any good way to shelter assets? Well, business assets don't count against you if you employ less than 100 people. So that's one, right off the bat, that's one possibility. And there's others, not so much having to do with assets, but having to do with reducing your income. Therefore, you pay less in taxes. I may try to do a whole nother webinar on that. I'm trying to get my CPA buddy to help me with that one. Okay. Polly, aren't schools like the Ivies not willing to give merit? Yeah, on their policies are to give need-based aid only. I think that is true for 98% of the families that apply, maybe 95%, but they do give baffling awards to people who don't show financial need. We see that every year with a couple of kids. So, but for the most part, the answer is yes, you're right. All right. Michelle, who are the stakeholders? I think this is when I was talking about negotiating. The stakeholders are admissions people. It could be a coach if you're being recruited. It could be someone in the music department, anyone that has some sort of relationship or vested interest in having you come to the school. And that was the big problem that almost thwarted my client and friend Rick, because he didn't include all the stakeholders. He didn't include admissions in his appeal. Matt, are the negotiations as simple as leveraging one institution against another? I wouldn't say that they're necessarily that always simple, but sometimes that's the best tactic to take. But other times, it's about new information. How to appeal a financial aid award might be that your income from 2 years ago looked pretty high, but the reality since then is far less rosy. Or it could mean you have all these expenses that they don't know about that are legitimate expenses. There could be other ways to negotiate or appeal. But I love having competing offers. That can't hurt. Polly, is there any way to shelter rental property? Kind of, sort of, but any income you get off of rental property flows through your tax return, so you can't make it vanish. But if you're in the business of owning rental properties, I gave an example on the webinar of a client of ours who had like 100, then you can make an argument that that these are business entities and they're not worth anything. In his case, we were able to make that successfully with one school, Michigan, but not the other school, Northwestern. So it's always a crapshoot. It's never a sure thing. Pat, one of the questions on CSS Profile is how much does the student expect to receive from parents? Should the answer to this be 0? When Pearl fills out these forms, I'm pretty sure she never puts 0. She usually puts something along the lines of the EFC that she gets from filing the FAFSA, which she does before the profile. So, 0 is just kind of it's a silly question. I'm not sure how much it matters, but I wouldn't put less than 10 grand, just realistically, unless you're in substantially dire straits. But if you make a 6-figure income, it's kind of, to me, it seems a little eye-rolly or cringy to put 0. So I wouldn't do that. Polly, what if you've waited too long to move assets around? I know. Didn't we talk like 2 years ago? No, I'm kidding. I'm trying not to shame you. I'm just kidding. Can you file the first year but file the second year? Meaning maybe you don't file the first year, but then you do file the second year. I'm just reading into that. The answer is yes, you can. Okay. Moving right along. I got a couple more pages here. Actually, one more page. Lanice, can I get them to consider my repayments of student loans that begin March for need-based aid? And then, as background, she was saying that her daughter's FAFSA, the EFC, says we're responsible for paying $25,000 for her college, which does not reflect any other debt because the FAFSA doesn't ask you about debt. So my answer is I would definitely appeal that. I would try to get them to consider that. I don't think that's going to work. The types of expenses that typically do prevail in an appeal are usually along the lines of you had some catastrophe, like a natural disaster, like a hurricane or a flood or something, or a medical, a whole bunch of unreimbursed medical bills, or you name it. legal bills from a divorce or shutting down a business, or it's catastrophic stuff, I don't think that your student loan payments are going to be enough, but I would still try it. Billy, again, Tina's case study changed my entire award. Thank you, Andy. Oh, that's good. I assume that's changing it for the better. So that's cool. Ed, will state universities consider merit scholarship appeals? Yes, but it's hard to get more money from state colleges. We always try. We might pick up an extra couple grand sometimes, but it's not as easy as private schools in general, but you should definitely try. To quote the philosopher, Wayne Gretzky, you miss 100% of the shots you never take. Michelle, we are just an average family with income of $130,000 a year, no home we rent, but we have $100,000 in the bank. Where do we put this in order not to have it counted? I have a Cayman's Island account that, no, I'm kidding. First of all, $100,000 is going to penalize you up to $5,600 and change. So I wouldn't get too uptight about it. It's probably going to be less than that because most colleges aren't that generous. They're not going to meet 100% of financial aid. So my short answer is I'm not sure that you need to do anything. The longer answer is possibly in an insurance product with cash value that doesn't have a lot of fees or any fees, and where you can get all your money back within a relatively maybe a 12-month period. But I'm really skeptical as to whether that you should even bother doing that. Charles got accepted to our long shot college in early action. Their offer that accompanied the acceptance was quite small. Need much more to make this work. So my question is when to ask for a better offer. So in terms of negotiating, what I would suggest is waiting until you get all the other offers, and any schools that have that compete with that school that you got into, those are the ones that I would try to. Hopefully, those are larger amounts. But it's harder when you have to beg, borrow, and steal, and scratch and claw your way in to a college, because that means they don't necessarily want you as much. But that's how I would do it. I would try to play other offers off against that school. Bernie, if I have a small business as a consultant and I am the only employee and sole owner, can this be excluded? Yes, absolutely. Wentao, does merit-based aid offset need-based aid? Not always, but frequently. Not always. Wentao, my child is already a freshman in college. We have a 529. Anything we can do now to shelter it? Well, it depends. Yeah, the answer is yes, because you reapply for financial aid every year, but you have to be wary of those potential negative considerations that I mentioned before. Wentao, how can I figure out if a particular college penalizes on home equity? It's going to be on their website. If they take the CSS profile, chances are they penalize you for home equity. But it's a school-by-school research thing. Michelle, thank you for the positive reinforcement. That's fantastic. Thank you. Interested in test prep. Joanne, yes. So she's a client. She showed up, and she was substantiating my outlandish claim that we helped her get an extra $15,000 a year from Fordham when she didn't think she was going to qualify for anything. And I said to her, "Hey, what are you even doing here? You could teach this class at this point." And she said, "Well, I have a junior." So I might be working with her again. Okay, Sherry's had a nice comment here. Tim, I am already working with Pearl. She was doing a great job. And she still is, Tim. She still is. Just in case she's watching this, which I know she's not. Carla, when is the FAFSA due for Ivy League colleges? I think I did answer that last night. It is due whenever they say it's due. Usually the priority deadlines, it depends on when you apply for these schools. They have different deadlines, but it might be end of the year. And if you apply early action or restricted early action or early decision, depending on the school, it might be November 15th, November 30th, November 20th. They're all over the place. Might be in December. And Wentao, how do we estimate current home value, Zillow or better? We use a methodology that is called the Federal Housing Index Multiplier, which sometimes helps, sometimes it doesn't. But you want to. The short answer is you want to lowball it, but defend it, and you can't use your assessed value. They say very specifically not to. All right, that wraps up all the questions that I couldn't get to. Again, sorry for the tech and human error fail on the webinar. If you are interested in talking to me, the way it works is if you're genuinely interested in potentially working with us. I mentioned the whole program last night, so I'm not going to belabor it now. So what you should do is just click on the link that should be right here on this page, and then I'll take you to a case studies video, which will give you a little bit more information about us. And there's also a button right there on that case studies video that will give you a link to an application to complete so we can get a little bit more information on you, and then you'll be able to book directly on our calendar. And if the spots are all taken again, I'll do my best, especially if you have a more urgent type of situation. I'll do my best to make sure that either I or someone on my team will get back to you and see what we can do to accelerate things for you. Okay? So thanks again. I love doing these, and it looks like you got a lot of value out of it too. I'm not trying to pat myself on the back. I can just tell from the questions, so that was cool. And the ratings. So thanks again, and I'll talk to you soon.